What's up, y'all? Welcome back to another YouTube video. My name is Camelia. I am a day trader, content creator, motivator, inspirator, whatever y'all want to call me. If you guys follow me on Instagram, if you don't follow me on Instagram, make sure you guys follow me right here down below. On my story, I asked you guys to ask me any questions in regards to supply and demand. And today in this video, I'm going to answer all those questions. We're going to do some chart markup. I'm going to answer all the questions. I'm going to try to answer all the questions. This video should be really interesting. Make sure you guys get a pen and paper because I'm going to really be dropping some gems for y'all. And let's get right into it. So first question is, how do you stay consistent? For one, I feel like consistency is something it's either in you, either you got it or you don't, right? Either you have a drive to reach that goal or you don't. Point blank, period. So when you ask me how do I stay consistent, it's like when you really want something, it's a no-burner that I wake up and look at my charts on a daily basis. I didn't have to train myself to do that. This is just something that I know that I want, and it's just been automatic. Like it's like second nature for me. All right, y'all, so I narrowed it down to just a couple of questions because in a nutshell, most of y'all kind of had the same questions. I might have to do a part two to this video. Let's see. I will know based on you guys' comments and seeing how well this is actually going to help you guys with your trading. So let's hop over to the charts and let's break down some of these questions. Now we're on my computer. Let me pull up my chart. Someone asked me, what is the difference between supply and demand and support and resistance? To keep it all simple, the difference between support and resistance is, and I'm going to draw it out and then we're going to first find it on the charts, okay? Because I want to break it down to y'all in kind of like kindergarten terms so y'all can understand it. That way when I show you guys on the chart, it's not as foreign. First things first, support and resistance, you trade support and resistance when price is in a range. So that means the market is moving up and down, up and down, up and down, right, until it eventually breaks out. But it's trading inside of this range where there is a resistance and there is a support, right? You have your ceiling and you have your floor. Price is just trading inside of that area, okay? So I like to trade on the 5-minute time frame. That is just a personal preference. If you want to trade on the 15, the 30, the 1 hour, the 4 hour, you can do so, right? Everything that I'm going to show you guys all applies the exact same way. The only difference is the time frame is literally what it is. It's a different time frame. Each of my candlesticks are worth 5 minutes. If you trade the 4 hour, each of your candlesticks are going to be worth 4 hours. So it just all depends on what type of trader you are. I'm more of a quick money trader, right? I'm a scalper. I want to be in and out of the market within a few minutes if I can, right? Which is why I'm trading 5-minute candles, and you can even get smaller than that. But 5 minute is my comfort zone. That's just what I totally choose to trade. You guys can trade whatever you want, but just understand that you can apply this to any time frame, okay? So we have this range, and price is trading inside of this range, hitting a resistance, hitting a support until it finally breaks out of that area, right? Versus support and resistance, you're going to use support and resistance when price is in a trend. And when price is in a trend, that is when the market is trending up, right? Or trending down. Okay? That is the difference. My drawing is not the best, but y'all get it. So I'm going to put this in text so you guys can screenshot it and take a picture of this. This is support. All right, so this is your support and resistance. I'm missing a T. And then this is supply and demand. I want you to take a screenshot of that, save it, stick it on your wall, whatever you have to do. Sometimes the market is going to trade sideways. Sometimes it's going to be moving bullish. Sometimes it's going to be moving bearish. And knowing what the market is doing allows you to know what tool to pull out of your toolbox in order to take advantage of the market. I like to narrow mine down to only trading supply and demand because it, one, decreases my exposure to the market, and it allows my setups to stay consistent as far as how they look. They tend to look the same. I want all of my trades to look the same. I don't want to take a bunch of sporadic trades that all look different, right? Because the more they look the same, the more confident you become in taking those trades because you're like, I've seen this before. I've seen this before. I know I've seen this before, right? So That's why I like to basically do that. Okay, so now that you guys know the difference between support and resistance and supply and demand, let's move on to the next question. How do I get in and out of the market trading supply and demand? Since we know supply and demand works in a trend, I'm just going to, let me just zoom out so I can just go to a random spot in the market here. We know supply and demand works best in a trend. So that means whether the market is trending down bearish or trending down bullish. So I'm just somewhere random on the charts here. And I'm going to focus on current price action, obviously where the market currently is. So if you had to ask yourself, what direction is the market trading in? You'd probably say, okay, it looks like the market was falling down here, right? We somehow stopped, like we found support, as you can see, because the price got here and we started trading sideways. That's that support and resistance. And then now we seem to broken up on this side. So you may ask yourself, I wonder if the market is going to continue up bullish because we broke out this way, right? And that's a good thought to have, but it doesn't mean, okay, I'm going to just enter into the market because I think that the market is going to move up bullish. What you want to do is you want to allow the market to show you a trend, right? If the market is moving up bullish, that means we're going to consistently make new highs. So if we have a high right here, price should come up and break that high, right? Pull back to a demand area and then push up and break the new high. And we should consistently just do this over and over and over and over until the trend decides to actually break. So that's basically the general gist of it. The trend is your friend until it breaks, and that's that literally. So if the trend is my friend until it breaks, I'm going to just consistently follow the trend because we broke out of our area here, our resistance here. So if price wants to continue pushing up, I want price to give me a trend, okay? So let's see if the market can continuously break highs. And you see how we have a push up here, how price pushed up. So when price breaks a high, I wanted to pull back to a demand area. So this, now I'm going into my question of entries and exits, right? How do I get into the market and how do I exit the market? So if I'm telling myself that I want to take entries out of demand, I'm going to mark up this demand zone here. This is my most recent demand. I trade the most recent demand. I'm not concerned about a demand down here. I'm not concerned about a demand over here. I'm not concerned about a supply up here. Why? Because this is not current, right? We want to go at what's currently happening. Price currently broke structure here. Price currently has a demand right here. So if price can come back and tap into that demand, then I will take advantage of the movement here. And that's where my entry will be if that happens. Right? See, price is pushing down here. And as you can see, price did not tap my area. Now, does that mean I just hop into a buy because price didn't tap my area? No. I want price to come back and tap my demand zone. If it cannot do that, I will just have to sit back and wait, okay? So we're going to sit back and wait until price gives me a clear demand zone that I like, that I feel comfortable with. So it looks like price is continuously to push up without breaking my zone. Without coming back and tapping my zone. Now we have a new demand. So we have this demand right here. To me, it doesn't look as good as this one, but hey, it's the new next most recent demand. So I have no choice but to honor it, right? Because the trend is obviously pushing up bullish. Let's see if it'll hold and tap into my demand area. So now this goes into another question I got. Key signs of a strong support and resistance zone. If a zone is strong, you will see it hold. And what I mean by you'll see it hold is you will see price tap into that zone without breaking the zone. So let's play it and see if we can get a tap into the zone. Price has tapped into the zone. Okay, and y'all, on me, I have found this area in the market randomly. I don't know what's going to happen in this area. I'm just going off what I would basically do in the market. We got to tap in our zone. We're going with the trend. All I'm looking for is for the zone to hold. And in order for this zone to hold, that means price should not be coming down into the zone and breaking below this zone. Now, there is another demand sitting right up underneath, so it could be coming back to tap that demand as well. But as far as this demand right here that I'm trying to trade, I do not want a candle to come and close in that zone. If it does close and break that zone, if it breaks it, wicks it, if it passed this zone at any point, it is now invalid to me. I will not be taking buys from this area if price invalidates the zone. Okay, so let's see if it's going to invalidate or what it's going to do. Also, before it takes off, and it looks like it already took off, how to enter and exit. Now, when it comes to entering a supply and demand zone, there's 3 different types of ways you can enter the market that I enter the market. Either 1, aggressively, 2, you can enter conservatively, or you can just wait for a candle close. So what that means is, I'm going to back this up. If I'm wanting to buy, I want to wait for a candle to close bullish. This candle obviously didn't close that strong, but it doesn't matter. It's still a candle close and it's still green, right? If I get a bullish candle closure at my zone, obviously it would be a bearish candle closure for a supply. But for a buy, if I get a bullish candle closure at my zone, I like to get in, break it a candle, meaning once price breaks this candle high right here, I would get in for buys. Now, the reason why I like that is because you can have a smaller stop and different things. Like when it comes to your exit, now you need to also determine your stop loss and your TP. I like to always first go for a 1-to-1. Depending on how large my zone is, I either put my stop loss outside of my zone. So this is a 30-point stop, which isn't too bad. I don't like to go no more than a 50-point stop. That's just me personally. But a 30-point stop isn't that bad. So I would have my stop loss outside of this zone. Let's say this zone was to be 100 points or something like that. I would then use current candle, meaning that current candle that I'm getting in, I'm going to have my stop loss below there. If price breaks below that area, I'm not going to get in. Okay? So this stop is okay for me, so I'm going to place my stop loss there, and then I'm going to place my TP at a 1-to-1. Now, you can see what your 1-to-1 is using this tool here on TradingView, right? You'll literally go in here and put long position or short position. I'm going long. I put it where I'm entering, and then I pull my stop loss, and I know I'm at my 1-to-1 when the ratio says 1. And then I can go for a 1-to-2 when the ratio says 2, obviously, and a 1-to-3, 1-to-4, and so on and so forth. Okay, but I like to go for my 1-to-1 first. That is my first TP. And then if I can hold runners to 1-to-2, 1-to-3, 1-to-4, then I will. Sometimes I trail my stops. Sometimes I put my stop loss at break even. Sometimes I just let it be stop loss or TP. It's completely totally up to you. You write your own trading plan. You have your own set of rules. Okay, so that's when it comes to my entry. And of course, like I said, the exit would be at my 1-to-1. Okay, so this is always going to be my first exit. I'm always securing something at a 1-to-1. Majority of the time, I'm securing 100% of my profits, right? Especially depending on how large the stop loss is. And I will trail some or add some more. That's when you kind of get more advanced with trading, when you start to do that stuff. But as far as just simply getting in, you set your stop loss, you set your TP, and then you just see if the trade will rock and roll. If it does, it does. If it doesn't, it doesn't. And it looks like in this instance, it hit our TP. Okay, so price hit our TP. Why? Because we followed a process. The trend is our friend. You can see how this trend, you see how we're making new highs. You see how we're making higher lows, right? You can see that, and you can see the new highs. You can see the new highs, and you can see the higher lows, right? The trend will be literally right into your face, and you continue to trade the trend until it breaks. Let's say you didn't get into this setup. Where would your demand be? right? Where is your most recent demand? Drop it in the comments right now if you can see it. Where is your next most recent demand? Obviously, it's going to be right here. You can see the candle, right? You're buying, your demand is always going to be a red candle. If you're selling, your supply is always going to be a green candle, okay? It needs to be a red candle. And I like this demand because we broke structure. So let's see if we can get into another demand setup, right? So price pushed up. If price can come back to my zone, I'm just going to get in. If it's pushing up, this doesn't wow me, right? This doesn't make me FOMO. This doesn't make me feel any type of way, because you know what all it's telling me is the market is pushing and it does not want me to participate. Because you hopping into positions right here, it's just almost like rolling a dice. Like, you don't know what the market is going to do. You're just literally crossing your fingers and praying and hoping and wishing that the market will continue to go into your direction when you can have structure with your trading. Okay, so price continue pushing up. That's perfectly fine with me. I'm going to move on to the next demand, right? I'm going to move on to the next demand until price gives me a entry that I like. Okay, now let's go ahead and play this one. Let's see what happens. See if we can pull back to my demand. Alrighty. So as you can see, price invalidated this demand. So it pushed off, but it invalidated it. So I wouldn't have gotten entries here, but that's okay, right? Sometimes you have to be okay with watching the market take off without you being in there if it does not give you an entry opportunity, okay? Because the market's not going to always give you that. So guess what I would do if I was trading right here? We're going to have to keep it pushing and wait for price to come down to a demand. Okay, so let's keep playing it. Let's see what happens. Let's see if the market will create another demand zone for us. And now you can see the market is starting to chop around, right? You see how we're not buying or selling that well? Guess what we're doing right here? In this area when price was chopping around in here, what were we doing? We were consolidated. Right? That is when price is just trading sideways. It's not trending. It's trading sideways. It didn't last that long, but it happened. Okay. So price broke out of that consolidation. Support and resistance traders, you probably had to use the 1 minute or lower to participate in that range because it was so tight. But we finally broke out of that range. We're being patient. Where is our demand? Our most recent demand. Okay. Right here. I am going to go ahead and add this full candle in here because this is the range of it. This is my demand right here. If price can pull back and tap that area, then I will just simply get in for buys. If it can't and it continues pushing up, it's just not my trade. If it comes down and breaks through it and invalidates it, it's just not my trade, okay? I want price to respect the rules that I set in place for it, because if it's following those rules, it makes me 110% more confident to load up on that. And I think I saw that question as well. How do you get the confidence basically to increase your lot size? This is how. When I'm taking the same setups over and over, when I'm seeing things play out how I want them to play out, it makes you so much more confident in the setup. So let's play it, see if price can actually come back for us. It didn't, right? Price didn't come back. Guess what? We're keeping on trucking, partner. We're going to the next demand. That's all I can do is go to the next demand and see what will happen. Let's play it and see if price can come back to a demand setup. You see how price is just continuously pushing? The average trader would either be doing one or two things. They would either be looking for the top and continuously trying to sell every time they see a red candle because, oh, price is just so overbought, instead of just continuously staying with the trend. Or some people are hopping in trades and just buying because they see price moving. And guess what? They're winning these trades. But the difference is they're not trades that they can write down, and they're not trades that they can teach to someone else or even teach back to themselves, because they have no idea how they made that money. All they know is they clicked the button and it was green, right? We want to do something a little bit more structured. So I'm just going to continue to wait to see if price actually comes back for one of my zones. Okay. So as you can see, none of these zones got tapped. None of these zones at all got tapped. Price has consistently been pushing up without tapping in any of these zones and consistently making new zones. And now that I think about it, I remember this day because I don't even think I traded this day. Whenever you have price pushing up and it pulls back, when we make that new high, this is when price breaks structure, right? This right here is when price breaks structures, when we make this new high. This is the pullback, right? And this is the break of structure. Once price, I don't know why my computer's glitching like this, but once price breaks structure, that now makes the demand below valid. Until then, until the breaker structure happens, the demand is not valid. Whenever you have your breaker structures here, the demand doesn't become valid until that high gets broken. Okay? So when price is moving up, so when you're waiting for price to come back down to that demand zone, the only reason why we're waiting for price to come back down to this demand zone right here is because we broke this high. If this high never gets broken, so if the market does something like this, push up, and we fail to break that high, now that's a red flag for me, because there's no way the trend could possibly be trying to continue if we are failing to break highs here. Because if we're failing to break this high, that means we now have a lower high. If we now have a lower high, then there's a high chance that the trend could be changing. Okay? Because as long as we're breaking highs, the trend is bullish. But the moment we make a lower high, now you need to be opening your eyes like, hey, could this trend be stopping? Because the trend is your friend until it breaks, and you'll see when it will try to break. So now let's pull up a real life scenario. And so you see how price is consistently moving up bullish here. You see the higher highs, like it's not the cleanest, but you see how price is consistently moving up bullish here. We're making new highs, yay. Price gets to the top of this area right here. And as you notice, for whatever reason, price failed to make, for whatever reason, price failed to make a higher high right here. Price failed to make a higher high right here, meaning if it wanted to make a higher high, this candle would have pushed up past this high right here. But we did not do that, right? Price made a lower high. And now that price has made a lower high, not only did we make a lower high, but we came and we broke structure here. Like price pushed down and we've now broken below here. So in simpler terms, price is moving up, down, up, down, lower high, and then we continue to drop so low that we start to break this structure right here. Okay? People have so many different terms for it. Oh, it's a mountaintop. Oh, it's a triple top. Oh, it's a double top. Oh, it's a peak. It's a peak easy top. It's a whatever top you want to call it. But just looking at basic, simple market structure, price just stopped making new highs and we made a lower high. And now the trend could potentially be changing here, right? We got a double top here. Price broke structure. We're breaking even more structure. And then we get this heavy push down right here. This heavy push down really is like what you really want to see, because now it's like, okay, we're definitely pushing down, because in this, when you're trading in this area right here, you're not sure. You don't know. You just see that lower high, price broke structure, start chopping around. You're probably thinking, oh, price is buying again, and then boom, we get this. So now obviously the trend is changing. But does that mean I just hop into sales right here and go short because price had this big heavy red candle? Obviously price should be going short from this moment. And guess what happens when you do that? Let's see what'll happen. You're immediately in drawdown. You're shaking in your boots right now. Why? Because your entry just doesn't make any sense. You have no idea what the market is going to do. And you've gotten out, and probably by the time you got out, then you get this push down. And you're like, I knew price was going to go down, but why did it pull back like this on me? It pulled back like that on you because you're getting into the market at the wrong time. Again, I've said it in the previous videos. Think about it like train stops. You don't want to get in on a moving train. You want to get in it when the train is coming to one of your stops. So you see how price is consistently making new lows. We got a new low here. Price broke structure. Now you can see we're doing that pattern to the downside. That's the structure it broke. And this is the leg that we're on. So if I want to participate in sales, what do I need price to do? Say it with me out loud. Just say it right in the comfort of your home. You need price to pull back to a supply zone, right? You have your supply zone. It's valid because you've broken structure. So now where's my supply zone? So this touches back on the question, entry and exits. Where do I get in and where do I get out? If price is selling, you're only getting in at a supply zone. So if price pushed down right here, where is my green candle because I'm selling? It's going to be right here. I'm going to add this wick into it as well. Okay, simple as that. If price can pull back to my supply zone, I will take sales because I'll be confident in an entry like that. And my stop loss will obviously be outside of the zone. And my TP will be at a 1-to-1. Okay, so let's see if it'll come back for me. If not, then it just won't be my entry. So as you can see, price continuously move down. Guess what? It's no different from the bullish trend that we didn't actually get another trade on. We're going to move on to the next supply zone. If it pulls back for me, it pulls back. If it doesn't, it doesn't. This supply is now active. Why? Because we broke structure right here. And we made a new low right here. So because that has happened, this is going to be my supply. I need price to tap into my zone. If it does not tap into my zone, it is not a valid entry for me to get in. I don't care if it actually plays out. It has to tap into my zone. So this right here doesn't work out for me. Why? Because we did not get a tap. If we zoom in, like, you can make it perfect if you want to. Price did not tap. Y'all get the point. It did not tap that zone. You can clearly see the gap right there where price did not tap. Have to wait for a tap. So let's bring it back nice and big. And let's just wait and see if that happens. Ooh, boom. We got to tap into the zone, right? Now that we have a tap into the zone, this is when you decide how are you going to enter the trade, okay? Option number 1. Let's make it capital. Aggressive entry. What is an aggressive entry? That's, hey, as soon as I see price spike into my zone, I'm in shorts. Boom. As soon as price spikes into my zone, I'm in shorts. The benefit of an aggressive entry is you get the smallest stop possible. So you got your stop loss right outside of that zone. Boom. TP. Got your 1-to-1. I would definitely go for a 1-to-2 in this instance with the stop loss that small. Right? That's your trade. That's for an aggressive entry. Take a screenshot of it. Okay? Then number 2. You have your conservative entry. Okay? What is a conservative entry? Waiting for a break of the candle. Okay, so what does that mean? Well, actually, conservative entry is waiting for a candle close. What does that mean? Since I want price to sell, I want to see a red candle close at my zone in order for me to get in. So let's see if this next candle can close red. Boom. We got a red candle. That's your conservative entry. Okay? That means you'd be getting short here. Once you see that red candle close, meaning if it went the full 5 minutes and it closed red, right? Boom, you'd be getting in. Stop loss could be current candle or outside of your zone. Now, as you can see, what is the difference? If I use outside of my zone, stop loss is twice as large, right? My TP is also twice as large. Since the stop is this large, I would probably use this current candle here or even current candle stop right here. That's just me personally. Okay, so current candle stop, you have your entry, you have your 1-to-1 set. Okay, and then last, this is the 1-to-1 here. And then last, I like to also use my break of the candle entry. Okay. 3, break of candle entry. What that is a combination of all three. We got the aggressive tap in the zone, you have the bearish candle close, and then you have the break of the candle, meaning when that next candle breaks this candle low here, stop loss definitely above current candle, TP 1-to-1, right? That is your break of the candle entry. So those are the 3 different ways you can get into a setup. Your exit is always going to be at a 1-to-1 or a 1-to-2. That's completely up to you. You have to decide which one you want to do. Okay. It depends on how much for me, it depends on how much I've won that week. It depends on what lot size I have on the trade, because to me, I feel like sometimes I'd rather go heavy on a 1-to-1 trade that I'm super confident in, versus trying to hold a 1-to-2, 1-to-3, 1-to-4, 1-to-5 to get that same amount, right? When I could pop 4 standards and get what I want versus a 1 standard and I'm trying to hold it for a 1-to-3 or something like that. So that's just me personally. You'll start to understand your trading style the more that you're on the computer. But either way, all of these entries will make you money, right? The only difference that changes is the risk. Okay, so let's play it. The trend is our friend, right? There's so many confluences with this trade. We have resistance here, change of trend. We got into the supply zone. There's no reason why you should not be confident head over heels about this trade. All right, this is going to be my 1-to-1. Let's play it and see how things work out. Price pushed down. And let's see, look at this. Y'all see how price came back and tapped the zone again? Once you get good at this, seeing stuff like this will actually get you excited. Did I take this trade? I gotta go. No, this is at 10:20 something, so probably not. But trades like this I absolutely love, because when price comes back and breaks structure and taps your zone again, this is when you can add more positions. Like, I would add more positions right here, y'all. Just me personally, but y'all get the point. You see how price is breaking structure. It's going with the flow and with the trend of the market. So let's see if price will actually come down and hit our TP for us. Chopped around, but we made it, right? Chopped around, but we made it. This shows you the trend is your friend until it breaks. Like, that's the main key part about it, is follow the trend. Like, I don't know how many times I have to stress this. If you follow the trend, you won't be as scared and as shaky, because I see a lot of people say, oh, I'm getting into a trade and I'm shaking. If you're shaking getting into a trade, you need to just close your computer and try again tomorrow, because there's no reason why you should be nervous when you're getting into these trades, because it should be something of the opposite. You should be super confident about these setups. Okay, so something like this just looks absolutely magnificent to me. But I think this basically touches on all the questions that I had, because I do want to go back to make sure you guys understand when a zone is invalid. So for example, y'all see how I marked up this zone, but we never came back and touched it. It's not valid until price comes and taps that zone, right? We then now made new zones here. I'm gonna bar replay this so y'all can see it. We then now made new zones here. Price broke structure, and then just for technical purposes, yes, if you got into a trade right here, this would be the zone. right? And price tapped that zone again. So if you missed that opportunity to get in, it gave you a second opportunity to get in. But these zones are very crucial for your entries and exits. This is what makes your entries and exits very, very, very good zones to enter in, and they make you confident in taking them. And then lastly, it's going to be my aha moment. Somebody asked me, what was your aha moment? And I'm going to be totally real with y'all. My aha moment was when I realized, oh, I just have to wait. Because I'm just going to briefly just skim over the market here. Like, even if you're just looking at these trends that are happening, like these downtrends, like you see all these zones that consistently just get tapped. Boom, boom. Like, just wait, right? If you're trading support and resistance, literally just wait. If you tell yourself, okay, boom, we're in a range. Every time price hits the bottom, I'm going to buy. Every time price hits the top, I'm going to sell. Every time price hits the bottom, I'm going to buy. Every time price gets near the top, I'm going to sell. Every time we hit the bottom, buy. Bottom, buy. Bottom, buy. Hit the top, I'm going to sell. That's just that's just support and resistance right there. And I realized, like, yo, it's not the market, it's me. Like, I just literally have to wait for my setup to happen. And it doesn't even have to be supply and demand or support and resistance. It could be EMAs. It could be trend lines, right? I can bet you right now I can find a trend line setup if I just skim through here. Just skimming a trend line through here. If your strategy is trend lines and you say price has been bouncing off this trend line for a few days, every time we get to the trend line, I'm going to buy. If you discipline yourself to actually do that, this could be a profitable strategy, right? Price here, buy. Tapped here, buy. Come back. Tapped here, buy. Come back. Tapped here, buy. Come back. Tapped here, buy. Until the trend line broke. And then once the trend line broke, guess what happened? You see the literal change in trend. You see the lower high. Like, you see the high here. You see the one lower. You see the change in trend. It literally shows you right here in your face. But a lot of times people just don't have the stillness to just sit back and say, okay, look, let me just actually just look at what the market is doing. It moves in a trend. And if it's not moving in my trend, I'm just not going to take a position. If it's not hitting in my area, I'm just not going to take a position. And that's what really made me realize, like, yo, I'm the reason why I'm not making any money. The market isn't the reason why I'm not making any money. I'm the reason why I'm not making any money. Let me come back to my camera right here. Once I realized that, I was just like, yo, it's literally me. Like, it's like a blueprint. Like, you write down a strategy and you say, okay, I want A, B, C, and E. If that doesn't happen, I will not take a trade. There's always going to be money flowing in the market. There's always going to be money to be made, but it's not all your money. It's not always going to be, the market is not always going to be set up in order for you to take advantage of it. If you're able to be patient enough to wait for a setup or wait for a strategy or some sort of system, that's how you get rewarded in the market. The market does not reward people who are greedy, and that's just point blank, period. And the thing that's so sad about the market, or the thing that's so deceiving about the market, is it'll look like it's rewarding you because it'll literally give you good setups. You could chase the market and make thousands. You get what I'm saying? If you want something that's going to sustain, if you want something that's going to be consistent, if you want something that you can depend on, you have to have a system and strategy in place. And nothing else is going to get around that, right? And that's how anything in life works. It's not even just trading. Anything that you want to work long term has to have some sort of system and structure that is consistent. Without that, it's all going to fall to shreds. So that's really about it. That's just a general gist. I might have to do a part 2 on this because you guys asked a lot of great questions. But I just wanted to basically hone in and make sure you guys understand how supply and demand works, and hopefully how to enter and exit trades, so that way you guys can make some money with me, and be more confident in actually the systems and processes that you guys have instilled inside of y'all. I know y'all can do it. All you have to do is just apply. Like you're literally right there, close to the finish line. I can't even say finish line, at the starting line, because we're just getting started, y'all. But we're finally up at that race, and all it takes is just consistency. Like it's literally a self game. And once you understand that this whole thing has to do with self, your whole mindset about trading is going to completely change. And again, it's not even just trading. It could be any niche that you get yourself into. It takes self-discipline and self-want to actually make this thing happen. Like, you have to actually want it and actually have to want to go for it in order for it to actually work out for y'all. So I hope you guys learned something from this video. Again, let me know, comment down below if y'all want me to do a part 2 to this video. Make sure y'all follow me on Instagram, because when I put these polls up for y'all to ask me questions, I'm reading through all these questions, and I'm gonna make sure that I educate you guys and be that person you guys have been looking for. You know what I'm saying? That's really my goal, is just to be that person y'all have been looking for to change your whole trading game. So I love y'all so much. I will see you guys in the next video. Make sure you guys like, comment, and subscribe. And yeah, I'll see y'all later. Peace out.